Hey everybody, I'm Jonathan Marsh, the owner of Home Helpers of Bradenton. From our years of experience working with clients with long-term care insurance policies, I've created an educational video series to help you understand your long-term care insurance policy and benefits. Let's go. Just a little bit of background on who we are. Home Helpers Home Care of Bradenton is a licensed Florida home health agency that provides non-medical in-home care. In-home care can be defined as supportive care provided anywhere that someone calls home. Care may be provided by trained healthcare professionals who provide assistance and ensure the activities of daily living are met. Here you can see that we offer both homemaker and companionship services and personal care services. The homemaker and companionship services are those hands-off type services such as meal preparation, doing the laundry, and general companionship. Whereas the personal care services are hands-on type services such as assistance with bathing, grooming, and hygiene. Based on reporting from the American Association for Long-Term Care Insurance, 73% of long-term care insurance claims start with in-home care. With there being such a need for assistance with long-term care insurance policies, especially as it relates to securing in-home care, we have created a specialty program that we use to help our clients with their long-term care insurance policies. Our 7-step process will help clients all the way from understanding their policy, initiating claims, submitting any necessary documentation, and working directly on their behalf with their insurance providers. Unfortunately, many policyholders never actually use their benefits. Sometimes this is because individuals feel that they're going to run out of their benefits, essentially running out of money. So I oftentimes feel the need to advocate for these individuals and educate them so that they can take advantage of these great benefits that they have worked hard and spent their well-earned money on. In this video, we'll go over what long-term care is, who needs long-term care, the types of long-term care that exist, what typical long-term care insurance policies cover, things you want to consider about your long-term care insurance policy, and we'll also discuss whether or not someone can purchase long-term care insurance today. First off, I highly recommend that you review your policy. Many individuals with long-term care insurance have their documentation organized like what I show in the picture here, but for many of them, they purchased these policies 20 to 30 years ago. Oftentimes, the only time that they will see correspondence is when they have to pay their premiums. Make it a habit to request an updated summary of benefits at least every 2 to 3 years. This way, you stay up to date on what your benefits look like. So, for example, a key aspect of long-term care insurance policies is whether or not an inflation rider exists. If an inflation rider does exist, then the policy increases in value over time based on inflation. If you don't have that rider, then technically it decreases in value over time. Before we get into the meat of this presentation, I just wanted to say that this presentation is intended to be simply educational. As a licensed home health agency, we do not sell insurance. So I would advise that if you want further information in terms of purchasing insurance or making decisions on your insurance, that you seek the professional assistance of a financial advisor or insurance specialist. Let's go over some statistics. And as we go through this presentation, you'll start to get an idea of when you should be filing a claim with your insurance company. So first, 70% of individuals over the age of 65, that's right, 70%, are expected to receive long-term care for an average of 3 years. So what this means is you, the person watching this video, are likely to need some form of long-term care at some point in your life. Also, family caregivers spend an average of about 23.7 hours per week providing care. 21% of those caregivers spend 41 hours or more per week. That's more than 1 in 5 family caregivers. Also, our population is getting older. In 2020, the life expectancy for men was 76 years and for women, 81 years. Contrast that to 1970 when the life expectancy for men was 67 and 74 for women. Also, every day in the U.S., 10,000 people are turning 65. And by 2050, 20% of the population will be over 65 years old. And here's a very telling statistic. So the number of insurers offering long-term care insurance coverage has decreased from slightly more than 100 in 2004 to about a dozen in 2020. And this has a lot to do with the insurance companies not projecting well and the fact that we're living longer and longer. Also, fewer than 1 in 30 Americans owns a long-term care insurance policy, and only about 7% of adults over the age of 50. If you're watching this video presentation and you have long-term care insurance, give yourself a pat on the back. You planned in advance, you're protected, and it's all about utilizing these benefits when you need to. When you think about it, we all buy automobile coverage hoping and praying that we're never going to get into a car accident. Well, when you look at long-term care insurance, with just looking at the first statistic of where 70% of individuals over the age of 65 are expected to receive long-term care, you almost know for sure that you're going to have an opportunity to use your policy at some point in time. Before we talk about insurance, let's make sure we understand what long-term care is. In its simplest terms, it's helping people live independently and as safely as possible wherever they call home. It's also helping with everyday activities, also known as activities of daily living. I have some examples of activities of daily living listed here, such as bathing, dressing, grooming, using the toilet, eating, and moving around. Just as a side note, in this presentation, when I speak of activities of daily living or ADLs, I'm going to be referring primarily to what long-term care insurance companies describe as ADLs. Certainly, if you were to Google activities of daily living, you would find a definition for instrumental activities of daily living as well as basic activities of daily living. So in this presentation, we will lean more to the basic activities of daily living, which are more in line with what's recognized by the long-term care insurance companies. This is going to become an important distinction when we talk about whether or not it's appropriate to activate a claim with your insurance company. There are two types of long-term care. So one being home-based, and then two, community-based, which we will dive into a little bit more here in a few moments. Now let's go over the top 8 misconceptions of long-term care. And I feel this is very important, especially because, like I was saying earlier, a lot of individuals never use their policies. Oftentimes that's because, like the analogy says, where we try to save something for a rainy day, but yet it's already pouring. So misconception number 1, I am healthy. I won't need long-term care. Well, remember, we went over that very important statistic earlier of 70% of individuals requiring long-term care at some point in their lives. Misconception number 2, my savings are enough to cover any form of care that I might need. Currently, Americans between the age of 55 and 64 have an estimated $104,000 in their savings account. That being said, care expenses can add up very quickly. And they add up very quickly and exhaust those savings. Misconception number 3, I can postpone planning. I have time and I'm still young. Well, long-term care is not just a concern for the elderly. Approximately 41% of long-term care recipients are under the age of 65. Misconception number 4, Medicaid or Medicare will cover my long-term care needs. Well, first let's talk about Medicare. Medicare does not pay for the largest part of long-term care services, which are the caregiving, the custodial or non-medical type services. Typically, we have found for clients that it is only covering those skilled services like skilled nursing, physical therapy, occupational therapy, and speech therapy. Medicaid, on the other hand, does pay for custodial services and medical care, but only for people with low income and assets. However, with our experience with Medicaid, oftentimes that care is not enough. And also, in many areas, there are simply not enough Medicaid providers. Misconception number 5. My health insurance covers long-term care. In general, health insurance is very limited as it relates to specific types of long-term care, even less so than what Medicare covers. In my experience, I have never seen a health insurance plan, and I'm referring to major medical, that covers non-medical caregiving or custodial services. Misconception number 6. My family will take care of me. By relying on your family for the care that you need, you put them at risk in a number of ways: financially, physically, emotionally, and mentally. Misconception number 7. Long-term care means going to a nursing home. Well, 43% of individuals actually have long-term care right in the comfort of their own home. Misconception number 8. It is too late to plan. The average life expectancy of an American is almost 80 years old. So take the opportunity and start planning now for your future care needs and the rising cost, and also avoid becoming a financial burden to your loved ones. So who needs long-term care? Well, it's difficult to predict how much or what type of long-term care a person might need. It's certainly not a cookie-cutter type of situation. There are several things that increase the need for long-term care, and certainly there's a higher chance of needing it as we get older. Also, women live longer and typically outlive their husbands, and therefore are at a higher risk of needing in-home care. Single people are more likely to need in-home care by nature of the fact that they're by themselves, and this is very similar to a widowed person who is left by themselves. Also, lifestyle, health, and family history in terms of health conditions will play a part in whether or not a person will need long-term care. When it comes time to activate a claim, you can activate a claim based on the need for assistance with performing activities of daily living or cognitive impairment. We will touch on some more details about activating a claim a little bit later in this presentation. So what are the types of long-term care? There are two types: home-based long-term care services and community-based long-term care services. When we talk about home-based long-term care services, we're referring to skilled home health, for example, skilled nursing, physical therapy, occupational therapy, and speech therapy, and then the non-medical services such as the personal care services and homemaker or companion care services. When we talk about community-based long-term care services, we're referring to supervised independent living, CCRCs, and CCRC is an acronym for Continuing Care Retirement Community. At CCRCs, the idea is that an individual can stay in that community and move within the levels of care at that community. The levels of care include independent living, assisted living, skilled nursing, and memory care. Also included in community-based long-term care services are assisted living, memory care support, and skilled nursing facilities. When we talk about future long-term care options, I wanted to show some price comparisons from a national perspective. And this is important to give you an idea of what everything may cost, especially when you're looking at a bucket of money associated with your long-term care insurance policy that you have available to spend. When you look at the homemaker companion, home health aide and CNA services, assisted living community, and skilled nursing home, those numbers were taken from the 2021 Genworth Cost of Care Survey and are based on an annual rate divided by 12 months. For the homemaker companion services and the home health aide services, home health aide and CNA services, it assumes 44 hours of care per week. The costs for independent living were taken from assistedliving.org. When we looked at their website, they took the assisted living monthly cost from the Genworth Cost of Care Survey and created their estimates based on the assumption that independent living cost approximately 30 to 50% less per month than assisted living. Now, a couple of important things to note. The first thing is that the homemaker and companion services, as well as the home health aide and CNA services, are going to vary in terms of cost. Not everyone needs 44 hours of care per week. At our agency, our clients are receiving probably about 20 hours of care per week on average. So the cost for those services, the in-home care services, may actually be less for many than what you're seeing here. In our experience, in-home care is actually going to cost less than assisted living just by nature of the fact that most individuals will require less than 44 hours of care per week. But also note, needs can change over time and sometimes dramatically at any given moment. And I say that because if someone all of a sudden needs round-the-clock or 24-hour care, the cost of in-home care will increase substantially. Another important note, so for all of these, with the exception of independent living communities, in theory, you could file a claim against your long-term care insurance. So let's now talk about independent living communities. So sometimes individuals will downsize from their home and move into an independent living community. However, an independent living community is just as it states, independent. So it does not give you the opportunity to initiate a claim on your long-term care insurance because they're not offering any level of care. However, it's very common for individuals living in independent living communities to receive the services of a home care agency like Home Helpers to support them, which could be paid for by a long-term care insurance policy benefits. So the main point of this slide is to really understand the cost and understand how it impacts that bucket of money associated with your long-term care insurance policy. Oftentimes, individuals will stay at home and receive services from a home care provider for the sake of being able to manage and control those costs and to not run out of money. Certainly, however, there are situations where those homemaker and companion or home health aide and CNA services will exceed the cost of living in a facility, and you have to consider those situations as well. So what does your long-term care insurance policy cover? I'm going to speak more in generalities on this slide because every policy can be a little bit different. The costs and the benefits are going to differ based on when you bought the policy, how much coverage you wanted, and any optional benefits such as an inflation rider, death benefit, or spouse coverage. Each policy can cover different types of long-term care. So for example, some cover both home-based care and community-based care, while others only cover home-based care or only cover community-based care. And in some cases, where a policy has been written to cover only community-based care, you might find that you can work with the long-term care insurance provider to show them that the cost will actually be lower if you stay at home and receive care there. So the cost or the premiums, as well as the benefits of your long-term care insurance policy, are based on how old you are when you purchase the policy, the maximum amount the policy will pay, and any other additional or optional benefits that you choose, such as the inflation rider that we spoke of previously. To be eligible to open a claim against the policy, in most cases you want to or you must require either substantial assistance with at least 2 of the 6 ADLs recognized by long-term care insurance companies, and those are eating, bathing, dressing, toileting, continence care, and transferring, or substantial supervision to protect yourself from threats to health and safety due to cognitive impairment. So, for example, what would be included under cognitive impairment are Alzheimer's and Parkinson's disease. So, one thing that is important here is the use of the word or. You're either eligible based on requiring assistance with 2 of the 6 ADLs, or you require substantial supervision due to your cognitive impairment. It is not both. So I'm making an important distinction here. It's one or the other. Either you require assistance with 2 of the 6 ADLs, or there's a cognitive impairment. Now, if you're activating a claim based on a cognitive impairment, here's something to consider. If, for example, your loved one cannot stay home safely by his or herself while you go out and run errands, well, that's likely going to be an appropriate situation to activate a claim. Also, I want to point out that you want to be honest when the assessment is done in terms of when you had filed your claim. So one mistake that I see sometimes is that individuals let pride stand in the way of them receiving the care that they need. For example, a person who needs help, even if that help is just someone standing by when they are bathing so they don't fall, that person may tell the insurance company, hey, I can bathe on my own, right? Or another example is a person that can do most of their dressing, and I'm talking about putting on their clothes. They can do that by themselves, but still need some assistance. So, for example, putting on their socks. And that is a part of dressing that needs to be considered. So my point is, don't let pride get in the way of, getting your claim approved. We oftentimes here at this agency can be available for our clients in person during an assessment by the insurance company to help advocate for them. On this slide, we show some commonly used terms when discussing long-term care insurance policies. As we have discussed previously, the activities of daily living, or ADLs, are those basic actions that independently functioning individuals perform on a daily basis. The elimination period, also known as the deductible period or benefit waiting period, is a specified amount of time at the beginning of a disability during which you receive covered services, but the policy does not pay benefits. And here's an important tip. You may be able to leverage recent hospitalizations or recent rehab stays or recent in-home care services to provide evidence to the insurance company in efforts to reduce the elimination period, thus saving you money. In other words, for example, if you had a 90-day elimination period and can provide evidence that there were 30 days in a rehab facility in the last year, the insurance provider may reduce your elimination period based on those 30 days of service. In addition, you want to make sure you understand if the elimination period is based on service days or calendar days, both of which are very different. Let's take, for example, a 90-day elimination period. Calendar days are going to be better because you can literally mark your calendar for 90 days out from the day you are eligible for benefits, and that is the day your benefit payments will start. Service days, on the other hand, require that you receive long-term care services for an actual 90 days. So, for example, and let's go with the same 90-day elimination period. Let's say you are receiving long-term care services on Monday, Wednesday, and Friday each week. At that rate, it would take 30 weeks to meet the requirements of the elimination period, or approximately 210 days. The daily benefit amount is the dollar amount that your policy will cover for the different types of long-term care. In most cases, we see the benefit amount described as on a daily basis. However, some policies have broken the benefit amount down by month or by week. But most commonly, if you look at the schedule of benefits, you will see a daily benefit amount, right? So we see that more frequently than monthly or weekly benefit amounts. The benefit period is oftentimes a misunderstood concept. A lot of times we see individuals that are concerned about the benefit period and, as a result, don't want to initiate a claim because they're concerned that they may outlive the benefit period. So what is the benefit period? And this is key. The benefit period is the minimum duration of time the policy will reimburse or pay for long-term care if you were to use it to its maximum daily or monthly benefit every single day or month. The most common are 2-year, 3-year, 4-year, 5-year, or unlimited lifetime benefit plans. So let's dig into this a little deeper with an example. Let's say you have a 3-year policy at $200 a day. That means your maximum benefit is going to be the number of days multiplied by dollars per day. So in this example, we're looking at 1,095 days multiplied by $200, which is $219,000. That's your pool of money. If you spend the maximum daily amount of $200 each day for 3 years, then your benefit will last exactly 3 years. However, your benefit could last longer than 3 years if you didn't use the full $200 benefit each day. So let's assume you only spend half the benefit, or $100 each day. Then your 3-year plan would last 6 years. So in short, the benefits may last longer than you expect, and therefore you may want to activate your claim sooner than you initially thought. So make sure you fully understand the definition of the benefit period. Premium waiver. So in most cases, once a claim is initiated and approved, your premium is waived and no longer has to be paid. This is important because in the end, this could actually result in a cost savings. Oftentimes we hear concerns about premiums and premium increases year over year. So if you have a claim that is approved and the premium is waived, you're now actually benefiting by, 1, you're receiving the care that you need, plus 2, you no longer have to pay a premium. So you're actually saving money. In this slide, we have some things to consider when looking at your long-term care insurance policy. The first question is, has your policy been purchased by another company? Previously, I talked about a statistic where the number of insurers offering long-term care insurance coverage has decreased from slightly more than 100 in 2004 to about a dozen in 2020. Many of the smaller insurance providers have been acquired by the bigger names like Genworth or John Hancock or Bankers Life. Sometimes when that happens, the benefits will change and are different than what you originally elected when purchasing your policy. So going back to what I've said previously, you want to request a statement of benefits on a regular basis, and I would recommend you do that every 2 to 3 years. The next question is, did you elect for an inflation rider? Hopefully you did, because with the inflation protection, which is also known as a benefit increase rider, your benefits increase in value each year. A policy without an inflation rider decreases in value every year as the cost of long-term care increases. This is important because if you purchased your policy, say, 20 to 30 years ago, you'll know that the value of your policy most likely is kept up with the increases in cost of long-term care. So be sure to review your policy to see if you have an inflation rider, and if so, how it works. I've talked to people who were not happy with the premium increases that they see over time. I even had one person that I talked to that let his policy lapse because of those premium increases. What I would say to anyone that is considering letting their policy lapse is that you've worked hard to pay these premiums over time. And it is your decision on whether or not you allow the policy to lapse. However, remember the statistic that I talked about previously, where again, 70% of people are going to need care. long-term care services. So it's probably in your best interest to keep paying those premiums. Lastly, be aware of Medicare Advantage plans that claim to cover long-term care services. There are a lot of Medicare Advantage plans, also known as replacement plans, that state that they have long-term care benefits. Make sure that you ask your insurance provider for a detailed explanation of the coverage, and also ask them for a list of providers that they are contracted with. I show this slide to try to calm some fears about exhausting your long-term care insurance policy benefits. At the top of the slide, I show some information that I got from the American Association for Long-Term Care Insurance that shows the top causes for long-term care insurance claims. Oftentimes, individuals will say, I'm too young, I'm only in my late 60s or my early 70s, and I don't need care just yet. Well, if there is cancer or that person has a chronic illness, it might not be a bad idea to go ahead and initiate a claim, because these statistics show that most of us are not going to use our entire policies. Which leads into my next group of statistics, because I want everyone to understand that most likely you will not run out of benefits. As you can see, the possibility of having a claim that lasts longer than 5 years is only 4.5%. And then when you look at having a claim of more than 3 years, that's still only 13.1%. And as you can see, I've bolded in red only 13% of long-term care insurance claims end because the policy benefits have been exhausted. 67% are due to death, and 20% are due to recovery. So if you have the fear that you're possibly going to exhaust your entire policy, the chances are slim that that actually is going to happen. However, if it is going to happen, it most likely would happen if the individual has transitioned into a skilled nursing facility, or an assisted living community where they have to pay a lot of money to be there. The possibility of someone exhausting a 3-year benefit when having in-home care services is actually less than 3%. It's about 2.5%. Like I was saying earlier, if an individual were to move into an assisted living community or skilled nursing community, the probability is higher because obviously the cost associated with living in those facilities or communities is most likely higher. That probability is about 26.1%. Also, I just wanted to show some scenarios here from a study from the American Association for Long-Term Care Insurance back in 2009. I tried to find a more updated graphic, but I could not find one. But I thought these were interesting and truly illustrate the value of some of these long-term care insurance policies. As you can see from these real-life claims, the benefits received were $1.2 million or $1.02 million, $990,000, and $690,000. On this slide, I wanted to just show and reinforce that having long-term care insurance really makes receiving care easier. I got these quotes from an article that I found by the American Association for Long-Term Care Insurance. 15% of home care recipients did not think they would be able to receive care if they did not have their long-term care insurance policy. About the same for assisted living residents. And then 83% of claimants agree that having their long-term care insurance made it easier to obtain services. And certainly it's easier to get services because in some cases there's no out-of-pocket cost, or the out-of-pocket cost is minimal. At the end of the day, long-term care insurance is great and makes things easier because it's all about not having to take that money out of your pocket. Sometimes I get the question, can I still purchase long-term care insurance? And my answer is to consult with a financial advisor or insurance specialist to find out more. Individuals must qualify in order to get long-term care insurance coverage. So the easiest way to put this is, the older you get, the more likely you will have health issues that will not be acceptable to an insurance company. and therefore you would be denied. And that's what this graphic is talking about on the right-hand side. It's talking about the percentage of applications that are declined by age band. As you can see, as you get older, the percentage of declines or denials increases. What I can also tell you is that the traditional long-term care plans of the past are few and far between nowadays. What I've seen most commonly nowadays are a hybrid type of policy that has both life insurance with long-term care insurance benefits embedded. In the end, I would say don't wait much longer if you are wanting to look into long-term care insurance. The longer you wait, the more expensive it will be, and you have a greater chance of being declined. If you need a referral to a great financial advisor or insurance specialist in our area of Manatee County, feel free to reach out to me. I showed this slide just to give you some other options to pay for care. Perhaps life insurance can be used to pay for care, or a reverse mortgage, or trust and annuities. On this slide, I show some great resources that you may want to look into as you do your own research about long-term care insurance. Some of these resources I actually use to provide some of the statistics for this presentation. Especially the American Association for Long-Term Care Insurance, they have a wealth of statistics and information on their website. If you have any questions, feel free to reach out to me and I will do my best to help you or refer you to someone who can. Take care, and we'll see you soon. Thank you so much for watching this presentation.